This is the Catch Up Network.
The Federal Reserve appears ready to halt its quiet balance sheet reduction, a shift that could redirect billions from government bonds into riskier assets like Bitcoin. When central banks stop draining liquidity, markets tend to get creative about where that money flows next. This policy pivot might be the catalyst crypto has been waiting for.
Looks like stealth quantitative tightening is coming to an end. Fed Chair Powell says Fed may stop shrinking balance sheet in months ahead, bullish. So what they've been doing is they've been letting their bonds, their mortgage-backed securities, once those that are on the Fed's balance sheet, once they expire, they don't buy anymore, they don't renew, they just let it fall off the balance sheet. Essentially, that becomes stealth quantitative tightening. Well, now they're going to stop doing that. Does that mean they're going to start buying? What happens when they start buying? That frees up more capital, and it makes it less incentivized for people to buy government-issued bonds or mortgage-backed securities and drive that money into the equities markets, which, well, we know Bitcoin and crypto live in the equities market, so that could be good moving forward.
The Federal Reserve's potential pivot from quantitative tightening represents a significant shift in monetary policy that could reshape asset allocation patterns across global markets. When the Fed stops allowing bonds and mortgage-backed securities to roll off its balance sheet, it effectively ends the passive withdrawal of liquidity from the financial system. This transition signals a more accommodative stance that typically precedes periods of increased risk appetite among institutional investors. The timing coincides with growing institutional adoption of Bitcoin as a treasury asset, creating a potential convergence of monetary policy support and structural demand shifts. However, the devil lies in implementation timing, and whether this policy change occurs gradually or as part of a more dramatic monetary easing cycle. Historical precedent suggests that when the Fed pauses balance sheet reduction, it often precedes rate cuts within 6 to 12 months. Though current inflation dynamics complicate this traditional playbook, the real catalyst for Bitcoin may not be the policy change itself, but rather how quickly traditional finance recognizes the implications for dollar debasement and seeks alternative stores of value. Watch for the Federal Open Market Committee meeting minutes in late January for specific guidance on balance sheet operations, as any mention of outright asset purchases rather than just stopping the runoff would signal a much stronger bullish catalyst for risk assets, including Bitcoin. Thanks for watching, and of course, if you like this video, don't forget to like and subscribe below, but don't stop there. Start making videos like this for your own channel. Click the link in our bio to get started.